Good day everyone, we are the representative from University of Malaya, GIG1005 Social Engagement Group 67, Branch 7 and Subgroup 2. I am SOFEA and my member WONG YUET and we will present an introduction in job order costing. The content of the topic will be the definition of job order costing, characteristic and type of job order costing, document flow summary, job order system cost flows, over-applied and under-applied. First, we will go through the definition of job order costing. Job order costing is a system for assigning and accumulating manufacturing costs of an individual unit of output. It is a method which is used to determine the cost of manufacturing each product. This costing method is usually adopted when the manufacturer produces a variety of products which are different from one another and needs to calculate the cost for doing an individual job. Job costing includes the direct labor, direct materials, and manufacturing overhead for that particular job. Next, we will look through the characteristic of job order costing. The first characteristic is it is used for production of large, unique, high-cost items. For example, a custom-made machine, custom-designed buildings, trucks to meet customers' special needs, or aircraft manufacturing. And the second characteristic is it is built to order rather than mass-produced. For an example for mass-produced is like a Coca-Cola manufacturing. And the third characteristic is many costs can be directly traced to each job. And the last characteristic is cost accumulated by the job. Next, we will look through the types of job order costing. Job order costing is used by companies with job operation or batch production operation. In job shop environment, production are manufactured in very low volume or one at a time. In job order costing, each distinct batch of production is called a job or job order. The cost accounting procedure are designed to assign cost to each job. Then the total cost assigned to each job are divided by the unit of production in the job to obtain an average cost per unit. For example of an job shop environment is include films production, custom home building, and aircraft manufacturing. Next, we will look through the batch production operation. In a batch production environment, multiple products are produced in batches of relatively small quantity. Examples include furniture manufacture, printing, agriculture equipment, and also pleasure boat production. And now we will look through the document flow summary. What documents are involved in the job order costing? So here are in job order costing. For job order costing, with referring to this sales order, a production order will come out where the job will start after getting this production order. Next, companies use a material requisition form to track materials being used in current items or order. It stated that certain materials have been taken from inventory and put toward the creation of the job. There is some section that you may find on the material requisition form which include the date the material was retrieved from inventory, the unique job number, the exact amount of material retrieved, items number and description, how much is the item cost, total of all items retrieved, who requested the items, who priced the items, and also who the items was given to. The material is either direct material or indirect material. We will look through the direct material first. Direct material are those material and supplies that are consumed during the manufacture of a product and which are directly identified with that product. Items designated as direct material are usually listed in the bill of material file for a product. For example, the wood used to construct a custom-made furniture that is to be sold. If it is a direct material, it will go to the job cost sheet. Next, we will look through the indirect material. Indirect material are materials that are used in the production process, but they are not directly traceable to the product. For example, in the custom-made furniture production, items such as glue and nails is used in insignificant quantities in comparison to materials like wood or upholstery. These are therefore classified as indirect materials. Other materials that are consumed but do not form part of the final product, such as cleaning product, also falls under indirect material. Indirect material will go to the manufacturing overhead account. Next is the employee time ticket. As an employee works on a unit order, they are often required to fill out a timesheet recording the work that they have completed, which we call it as time ticket. Section of a time ticket can be included. employee's name and ID number, the specific job number they are completing, a list of each job, the date each job started, how many hours each job took the employee to complete, the employee's hourly rate, the total cost of job, and accounting and supervisor approval. First, we will look through the direct labor. Direct labor is the cost of the employees who are directly involved in the product's production process. It includes their wages and any other benefits that are offered while working on the product. For example, the person who collects wood pulp and send it for processing into paper, and the person who monitors the whole production process from start to finish are both considered as direct labor. Direct labor will then go to the job cost sheet. Next, we will look through the indirect labor. Indirect labor is the labor of those who are not directly involved in the production of the products. An example would be security guards, supervisors, and quality assurance workers in the factory. Their wages and benefit will be classified as indirect labor. Indirect labor will go to the manufacturing overhead account. Next is the manufacturing overhead account. Manufacturing overhead costs include direct factory-related costs that are incurred when producing a product, such as the cost of machinery and the cost to operate the machinery. Manufacturing overhead costs also include some indirect costs, such as the indirect material, which we get from the material requisition, the indirect labor from the employee time ticket, and also other actual overhead charges. Then we will use the predetermined overhead rate to calculate the manufacturing overhead account to apply it to the job cost sheet. Now we will look through how we can calculate the manufacturing overhead cost. So the first step is we need to know what is the predetermined rate. So how to calculate the predetermined rate? We need to divide the budgeted manufacturing overhead cost with the budgeted amount of cost driver or activity base. Overhead is applied to job using the predetermined overhead rate. And the second step is, after we already get the rate, we need to calculate the overhead applied. How do we calculate the overhead applied? We times the rate and the actual activity. Rate is based on estimation, and actual activity is the actual amount of allocation base. Here is an example to calculate the manufacturing overhead cost. First, we assume that the company has a budgeted manufacturing overhead for the period of 360,000 and they are expected to use 40,000 machine hours over the same period. And the company used estimated machine hours to calculate the predetermined overhead. The actual machine hours taken to complete one specific job is 30 hours. So first, we need to find what is the predetermined rate. So we can find it by dividing the budgeted manufacturing overhead, 360,000, with the machine hour, 40,000, and we get it as $9 per machine hour. After we get the predetermined rate, we need to calculate the overhead applied. We can calculate the overhead applied by times the predetermined rate of $9 with the actual machine hour taken, which is the 30 machine hour, and we got it as $270. Now I'll pass the floor to my other partner, YUET. Thank you.
Okay. So hi everyone, I'm YUET. So after understand what is job order costing, what are the documents involved, now I'll be talking about the cost flow. What are the costs involved in job order system and how do we record all these costs? So all the transactions will be recorded in T account and journal entry. We will discuss this in detail later. So first, material cost. Next slide please. So to record the acquisition or purchase and issue of raw materials. So these are the T account. We will look at the T account for raw material first. So in the debit side, we have the amount for material purchase, while in credit side, we have the direct materials and indirect materials. Then we will move this direct material and indirect materials to its respective T account, where we will move the direct material to work in process T account, as well as indirect materials to the actual manufacturing overhead T account. Next slide please. So this is the journal entry. For material purchase, we will debit the raw materials or inventory and credit account payable or cash or bank. It depends on how you paid for the acquisition. So for material usage, we will debit work in process and manufacturing overhead, while credit raw material. Because when we use the raw material, it will start to decrease, right? So that's why we will credit it. Next slide, please. So for labor costs, next slide. So to record labor costs in the T account for salaries and wages payable. Credit side we have direct labor and indirect labor. So then we will move the direct labor to the work in process T account, while indirect labor to the actual manufacturing overhead T account. Next slide please. So this is the journal entry to record the labor cost. First, we will debit work in process and manufacturing overhead and credit salaries and wages payable. Next slide please. Okay, for manufacturing overhead costs, it is slightly complicated compared to the material costs and labor costs. So in manufacturing overhead costs, we have two types. We have actual manufacturing overhead and applied manufacturing overhead. So for actual overhead, it is the amount of overhead costs that the entire company might incur. It might include a various number of job orders. However, applied overhead is the amount that is added to a particular job order only when it is completed or done. So this is done by using the predetermined overhead rate and actual activity base, where we have explained this earlier in the document flow. Next slide please. So first, let's look at how to record the actual manufacturing overhead costs. So we have indirect materials, indirect labor, and other overhead. The example for other overhead would be the depreciation costs and utility fees like electricity and water bills. Next slide, please. So this is the journal entry to record the actual manufacturing overhead costs. First, we will debit the manufacturing overhead, credit the accounts payable, property taxes payable, prepaid insurance, and accumulated depreciation. So in the credit side, we can see that some of the example for the other overhead. Next slide, please. So now, let's look at the applied manufacturing overhead costs. For your information, all the T account will reach a balance at the end of calculation. So, if the actual and applied manufacturing overhead are not equal, a year-end adjustment is required. Then we will move the applied overhead to the job cost sheet, which is the work in process T account, which means that we will move the manufacturing overhead that we had already used in that particular job order. So be careful in this step, we are not moving the actual overhead, but we are moving the applied overhead to the work in process T account. Next slide, please. So this is the journal entry to record the applied manufacturing overhead cost. First, we will debit the work in process and credit manufacturing overhead. Next slide, please. So now we will look at the COGM, which stands for Cost of Goods Manufactured. Next slide, please. So when a job are completed, the COGM will be transferred to the finished goods T account from the work in process T account. Next slide, please. So this is the journal entry to record the COGM. We will debit the finished goods and credit work in process. Next slide, please. So lastly, we will look at the COGS, which is cost of goods sold. Next slide, please. So COGS is the situation when the finished goods are sold. So we will move it from the finished goods T account to the COGS T account as shown in the slide. Next slide, please. So this is the journal entry to record COGS. There are two transactions to record here. So first, we have to debit the account receivable and credit sales. And second, we have to debit the COGS amount and credit the finished goods. Next slide, please. So now, moving on to the last part in this video presentation. We will look at the over-apply or under-apply for manufacturing overhead costs. Do you still remember the manufacturing overhead costs that we recorded just now or calculated just now? So it might be a situation where the company might over-apply or under-apply the cost. Next slide, please. Okay, so when a company is over-apply the manufacturing overhead cost, it means that the applied overhead is greater than the actual overhead. While if the company is under-apply the manufacturing overhead, it means that the applied overhead is less than the actual overhead. Next slide, please. So how do we record both situations? We will record this using the journal entry. So for over apply, we will debit manufacturing overhead, credit work in process, finished goods, and cost of goods sold, which is COGS. Next slide, please. So for the under apply, we will debit work in process, finished goods, cost of goods sold, which is COGS, and credit manufacturing overhead. Next slide, please. Okay. So that's it for the video presentation for today. Thank you for watching.